Welcome to the show, Amanda Webster from Fund and Grow. Thank you so much for being here. Appreciate you taking the time. Fund and Grow is an awesome company. We're going to talk about all the awesome ways in which you can help businesses get off their, get off the starting ground to actually become something that they can actually envision as being successful. Amanda, thank you for coming on.
Thank you for having me.
So check this out. I mean, I've got some questions here. I'm not going to have time to go through all of them because there's just so many questions, because you're not a bank, but you have helped over 30,000 businesses actually get the funding that they need to actually start and build and grow. And to the tune of 1.8 billion. And that's right on the front of your website. That's a real number. You've got a ton of reviews. There's a ton of activity there, and you're not a bank. Like, how are you able to find the money that businesses need at a level of zero, which is zero interest for what you advertise? How do you do that?
So it's a model that it's educating people that this type of funding exists, because most people don't know. I actually learned recently that only 20% of small businesses actually utilize and have business credit because they don't understand what that is. They don't understand how they can use it. They don't understand how to get it. So what Ari did is he started this company in 2007 in his living room, and he developed a company, and he actually did it and started and grew it by using the exact type of capital that I'm talking about. And it's business credit cards, and people just discount it as soon as they hear credit cards because they're not understanding this enormous amount of credit limits you can get on the EIN side, on the business side. And so we took the time to learn and actually continue and always be looking at all of the industry inside information, what underwriters are actually looking for, even within credit cards. Most people just think you apply online and you're done. Whatever it gives you, it gives you. And that's just not the case. There's a whole process you can do and get hundreds of thousands of dollars in business credit.
Yeah. And so we're talking about hundreds of thousands to around 250 is kind of like your benchmarks, right? So I guess that's based off like just what the general rule of thumb is. Can you get more than 250, or is it like that's pretty much where you sit? Is that the max?
No, the reason we say 250 is because on average, in the 12-month period that we're working with a client, that's what we can do. Now, we have clients who have come back, and we have clients who get, I've got, I think 550 is the top that I've seen, 550,000 in business credit. But that took a couple of memberships, that's what we call them, in order to get there, because you have
You
to
call this
stack
credit
it.
card stacking, right? We're
Yeah.
stacking them up. We're getting more than one. So
Yeah, you got to stack it over time. And it's not even just, a lot of times one of the creative things we do is we take, let's say you have one Chase card, and then you come back and we do another Chase card. We can actually merge those accounts together into one Chase card. So you're not ending up with 25 cards. That's not our goal, is not to end up that way. We try to limit that because we are not here to hurt your credit, hurt your business. We want to make sure you're set up for success on both sides, both personal and business.
yeah, I get that. And listen, I've been in business for a long time, and there's many a time when I've been at Costco or at a restaurant with some clients, and I pull my wallet out and I'm trying to shuffle between which card I think I should be using. But when you've got like a deck of cards, it's like, and there's a lot there, like, okay, hang on. It's like you're playing a little card lottery. It doesn't always look good because people think like they don't know why you're doing that. They just generally think it's because, are you just going to test to see which one actually has credit available on it? But like, no, you're just trying to say, no, this is for miscellaneous. Okay, so this one's for internet stuff because I get good points on that one.
Yep.
Like how I use like the Amex card almost exclusively for all my ads, my ad accounts, because I mean, I blow money on ads, and I need those points because those points
Amex
keep coming in.
is my favies.
Yeah, no. So look, up to 250, but this, when you say zero, it's 0% interest, but this is up to anywhere between 12 to 18 months of 0% interest. Does it come back with like a whopping huge APR after that, or is it like still reasonable?
So there are some offers that go all the way up to 24 months. So it just varies. Offers change from time to time. So anywhere from the lowest I've ever seen is 9 months, and then all the way up to the 24. So, but your average is going to be 18 months roughly in the free interest type. So there's definitely interest rates. You know that going in when you sign up, for on our side, when we're strategically picking out which offers are best for you and your business, we send you those disclosures. You're reviewing them. You know exactly what that interest rate looks like. The credit card interest rates are definitely historically higher than your traditional lending ones. However, currently probably not the case, in the sense of the gap's a little bit smaller because interest rates are a little crazy. But they can range anywhere from 9%. I mean, there are people that if they're just not as bankable as others, they can get into that 24 or 29%, area. But business credit, this type of lending, once you exit that 0%, the point of the 0%, the point of why we strategize it that way is to give you time to build ROI, give you time to be using this capital to pay for things that are going to actually give you a return. So you shouldn't just be, I mean, don't go out and buy a boat. That's not the point of this credit. Like, don't do that. You want to create traffic, create lead sources, pay for ads, whatever, if you're doing the e-com world, creating, product to sell, whatever it may be, you want to create ROI to be able to pay that back. So this should not be the type of capital that's being held for long term. You should be building your line so that you can pay for your ads, and that by the time your card is due, you actually have had the ROI to pay that back. And now you've also earned all those points and rewards that you can get with those. So it definitely is a strategy. That's why we're not the type of company that just says, oh, here's how you do it, go do it. We're actually going to build the entire plan of exactly what's best for your personal profile, for your business profile. And it's a long-term plan. It's not just apply and done. This is a long-term plan to be able to make sure you have this, because it's revolving and it's set up and you're good to go, and you can continue to grow it even after leaving us. But it's so that you don't have to keep reapplying. When you go get a business line of credit from your local bank, there's a term. You're going to have to pay that back. You have set payments every month. The interest is set at what it is. You have points for even, closing on that loan sometimes. And then when it's done, you have to reapply. And you have to go through this whole process of that. We don't have to do that. There's a lot of red tape with that we don't have to accomplish. So that's where you have to build that plan, but that's what we're here for. And then we even have premium coaching, which is a long-term, low ticket offer in order to continue to help and consult on things like that.
That's pretty awesome. Or you could then you could even consider swapping the debt. Like you build your business up with the credit. You've got an income producing entity now. You're now in a good place, but you can now swap the debt for equity. Like you can literally get an angel investor come in, buy out the debt, and you've got a way longer term access to capital, and you've not got the interest rate. You've got to give up some equity, but now you're not having to worry about paying this back over a short period. So that's like, there's other ways you can work with this, because this is really giving you that boost. It's giving you that push that a lot of people need, and if they're always thinking about how am I going to get investors, I have to convince people, make a pitch deck, do this and that. You're not going through that. You're saying, look, let's look at you. I don't know, hang on a sec. You're not looking at you. You're looking at an EIN number. So let's talk about that. Let's see, I'm even getting confused here myself. So we need to, there is a clear definition between what is considered like your social, and now you've got the EIN. And so bear in mind, I'm British. All right. So even I'm a bit rusty with this, but I do have an EIN. That is your social security for your business, essentially, yes. Right? It's your tax identification number. Okay. So now with this EIN, it's attached to a business, but the business hasn't got any assets. It doesn't have any behavioral scores. It doesn't have a track record. This is a brand new entity. How does it work? Because how does that entity generate enough trust with a bank or any kind of a lender to actually, warrant that kind of money becoming available for them?
So everything in life is about leverage, right? You got to leverage all the things to get ahead. So there is a leverage component of it. So they do look at, so your social security number is also needed in the sense of to pre-qualify and get the funding. It's not going to be reporting on your personal credit. It's not going to affect your personal credit, none of that, but they're going to actually leverage your relationship you've had with personal credit to show that, okay, I know it's a brand new business, but you've done really well over here. We're going to take that risk on this side. So we leverage not only your personal credit in general, but the relationships that you've already built, hopefully, with some of these major lenders that we're working with, or even the major banks that you bank with as a business. Even if your business account is only a month old, like either way, if you have a relationship, who do you use for your personal checking? Doesn't matter. We're going to look at all those pieces to leverage that to get into the business side. But that business credit is only going to be on the EIN. And that's going to start building you up Because yes, eventually, if you build up correctly, then you won't need you won't need that personal credit to be leveraged anymore, because then you have enough trust on this side. So there is a little leverage that has to be there, but that's just kind of the cost of not having to wait 2 years in business and have all this provable revenue in here, especially in that startup space. This could be the money that gives you the ability to create and beta tests or whatever it is that you have going on or that you're creating to get that funding in, to be able to get you to that next step of the funding for it, whether it's in the angel world or, whatever it may be. Yeah, I know there's an equity play in that world, but that's again, leveraging, and the cost of capital is there no matter what way you look at it.
Yeah, okay. I like that. And I could see the immediate use case. When you talk about ROI, you mentioned some examples there. I mean, one of them I could see is, a lot of people spend a lot of money trying to build their businesses up. And then they go into like, okay, now I've got to market it. I wonder if I should start with $100 a day. I'm like, well, that's not really going to cut it for the most part. I don't know if you've noticed, Facebook prices have been jacked up. So it's like, you do need money to prospect,
Yeah.
You've got to go out there and have the capital available for these ads to trigger the kind of the rewards you want, which is leads coming through, buying your thing, and it requires access to money that can be spent on an ad like that. And that is one of the most common conversations I'm having with people. It's like, you got to speculate to accumulate, right? You got to put some money out there. And if you're not putting it out there, how do you expect to get it? You got a business idea that's sitting in a vacuum. No one knows about it. You got to market it. And the biggest thing is like, well, how do I get the money to do that? And,
Yeah.
With my business, what we're always looking to do is how can we get you the access to capital? So we're talking about, let's find you investors. And I work with accredited investors, sophisticated investors in Europe. And even small VC firms where they're looking at sort of bootstrap, cash flat businesses with a flat cap table. We work with small businesses like that, but these are equity plays. So you got to give it up. You got to give up some of your company. This gives you a very easy way to get the money that you need without having to give up equity. And I love the fact that is on the front page of your website too, because that's a really big sales point. Okay, so what about changing the avatar? I'm referring to, as I'm alluding to the new business entrepreneur, the entrepreneur, right? The guy who just got a business plan, the gal who just put together the Shopify. Now they need some ads. Like, so they've got the side hustle, and now you're giving them the way to make this become the main hustle.
Right.
At least to try it out for a few months in between a job or something. Like, you now have a real opportunity to make this work. It's not hoping and praying anymore. But yeah, it's true though. I mean, people just they have the idea and then they'll sit on it. Like, hey, you need to actually get the message out there. So what about the person that's been in business? What about the person that has a fully functioning business? They've taken on equity. I'm thinking about my own clients right now, right? They've got equity. They've got investors. They've put their own money into it. They've got good personal score, but they've also got business credit cards already. But now they want access to more.
Yeah.
Is this still viable for them?
Oh yeah. That avatar is kind of like the golden avatar of our client base, because when you already have a seasoned business, you're going to look even more bankable. When you already have history with business credit, you're going to look even more bankable. And some of the lenders, they don't even re-pull your personal credit if you have enough of this. They'll just they bypass that by having it. But also remembering, this is unsecured funding. So even if you have investor side, even if you've given up some equity in order to get everything going, this can be another extension. This might be, maybe you've hit that first growth point, right? They say the growth points are at 1 million, 5 million, 10 million. Those are those points. Well, how do you get to that next one? And usually you got to pay to play no matter what level you're at. So this can be another supplement to that. This can be something even for the most seasoned business owner to be able to have more and more and more. And so it's, like I said, it's crazy when I hear that only 20% of small businesses are even using business credit. And I'm like, why? Why would you not be using it? It's this amazing revolving debt that you can leverage in so many different ways. There's this weird mindset that, especially in the US, I don't know about anywhere else, but in the US, we've all been trained like credit's bad, debt's bad, this is all bad. But at the same time, unless you are coming into adulthood with affluence, you have to do something. You have to leverage debt to buy your first car, to get your first apartment, whatever it may be. There's this whole game. It's the same thing in business. You have to be able to use all the cards at your table to be successful. And this is one of the easiest, it's like the path of least resistance when it comes to funding.
That's interesting. That's it. I mean, when I first started out in the US, I couldn't get access credit purely because I didn't even have a social security. I was still in that whole process.
Yeah.
But I can understand. I can understand why. And bear in mind, I come from the UK, and a lot of places in Europe operate in a similar fashion. Where look at this, it's very difficult to actually get credit cards, and if you do get a credit card, you're not really getting very much. Like when I went to the US, and once I started to get credit, they were offering me, here, this one will give you 20 grand. That one's going to give you 50 grand. You can ride this one all the way to 100 grand if you want. And I'm like, oh, hang on a sec. Back in the UK, they were like 3,000. And if you do well by the end of the year, 3,500. I'm like, it's really bad. It sucks because and you will see it here. Like people are, and I'll say this, and people might hate me in the comments, but this is the UK crowd. You're not even worried about those guys. Like they're not as enterprising, and a lot of it is because of those constraints. They don't actually have access to the credit to go and take a chance on something. It's like, well, I've got to get a job, I've got to save, I've got to access the capital through different means, and it gets way more complicated. Whereas in the US, I think it's way more available, but you might just see it happening more so when it comes to personal credit, and people don't realize that this is actually available for them to be actually have this allocated to an EIN separate to themselves, unsecured. I think maybe that's where this may come from. It's just a knowledge issue.
Yeah.
I mean, America's a big place. 20% represents a big part of the population, but not all of that population is really clued up on exactly what to do about getting set up in business. I can see that being the case. So what would be the sticking point? Like, so what would stop someone from being able to access it? Like, they got a business plan, they're happy-go-lucky. I know you guys have some fees that they've got to pay, but I know you have some guarantees, so there's absolutely no risk for them. They can come and take that journey with you. And also there's that they can do it, the DIY version, they can do it themselves, right? They can learn along the way and do it. What would actually be a thing that you would say, hey, look, if you've got this mark on your report, don't even bother. There's no way, no hope in hell for you.
I'm an optimist always, right? So I always say I can build a funding plan for anybody. But, if you have a bankruptcy that's still in that cycle, there's not much you can do because unfortunately that has that condentation that no lender wants to touch. And that's just an unfortunate place. But I always say to people, do you have a partner? Because maybe we can start the business credit with that partner instead of you and try to find it. Just major derogatories like, a charge off that still has a balance. That's kind of a no-go, basically meaning that they chased you for the money and you never paid it. And now it's sitting over here and it's going to ding you until you figure it out. So those are the kind of major kind of no-go areas. We can typically build a plan for anybody. But in order to be like ready today, ready to move forward, it's not anything crazy. We're looking for like a 680 credit score with no major derogatories. And we need to see a little bit of mix, meaning that, it can't be an 18-year-old kid that has one Capital One card that's $1,000 limit. Like that's not really going to give you enough of a profile. But we do offer personal building as an add-on. It doesn't cost you anything. It adds into the membership. It extends it in order to be able to beef up that personal profile if that's the problem. If the problem is you just don't have a lot, you just have like one card, we can assist in beefing that up a little bit as well. So I say that anybody can get this access if they just trust the plan and the process. But I also can say that if your score is like a 550, you're going to need some credit repair. You're going to need some help to get you out of whatever hole that you're in. And listen, life events happen and I can completely understand. And we want to get you there, but we can't do credit repair. So we're going to have to send you out. You're going to have to go do that in order to come back for us. But that's really it. Otherwise, anybody else in that normal, range, I think actually the average American, I think is like a 660. We can, even a 660, we're going to be able to figure a plan out for them pretty quickly.
And when you say figure out a plan, like, is that getting them to the 100, 250K, or does it shoot lower than that usually? Or
they're probably not going to be the top end of that 250, But I definitely know that if they follow the process and do it as we instruct and go with our program, we're going to get them some good numbers. It may not be all the way up to the 250. I can't really I can never guarantee what that result is. What I can guarantee is that if you're not happy, we have a money back guarantee. So like if you're not happy and you can't get funding, we're going to give you your money back. So it's just a matter of trusting the process. It is stacking. It is long term. So if the first point only gets you 20,000 because your credit wasn't great and you had a really lean profile, trust the process that on the next one, we're going to get you a much bigger chunk. And that's why we have the 12-month program, to give time to do all that.
Okay. And like when you say, I mean, just to talk about that guarantee, I know you have like a little time limit on that, like 60 days. Like like what's the chances that they'll be able to access, you talk about someone 680, 700, like what's the chances that they'll be able to access that kind of
Oh,
credit, like 100 grand? Is it be like within 30 to
oh
50,
yeah.
60 days?
30 to 45 days. Yeah.
Wow.
And might even
Pretty
be
quick.
less depending on the profile. Yeah. We will absolutely know within that 60 days where they're at and whether this is going to work. Absolutely.
Cool. I ask these questions because I know that's what people are thinking. Like,
Yeah.
I could sit here and talk about, okay, challenges with startups and what have you seen? And I'm going to ask you. I want to ask you about case studies. I want to ask you about what you generally know to be true when it comes to people starting out. But I know that when people look at this company, your company, they're going to say, well, how do I know this is going to work? Because there are banks saying the same things. There are financiers out there saying similar things. And it sounds like you're really taking people on a journey where not only are you just giving them access to it, it sounds like there's a consultancy element here. You call it the
Yes.
membership, but you really are consulting people in terms of at least what they should be doing financially for their business to go in the right direction. Do you guys go beyond that? Do you start becoming like almost like I shouldn't like these are, some of these words are protected, like fiduciary
Yeah.
partner and stuff, but like you get into the realm of like, well, we can recommend this partner for this person for like tax advice or this. Do you partner out like that? Do you give businesses even more, or is it right now just credit?
So with the regular membership, it's going to be the consulting, the one-on-one funding strategy plan, all of that, helping you with everything along the way, making sure you're successful. We call the team the success advocates to make sure every client is successful in the program. The add-on, the premium coaching, that's a $50 a month add-on. It's not required. It's just an add-on. That's where you can go beyond. That's where we have live coaching calls. You can reach out and ask for connection points at any time. And yeah, we love to build really solid strategic partners that do things that we can't, right? I can't do taxes. So let me make sure I'm connecting you with somebody I try to find national partners. That way it can work in any state. So yeah, we absolutely do that. And that's more of that add-on piece. And so it's not required, but I highly recommend it. And like I said, we do a once a month live coaching call. We have a magazine we produce in-house that goes out that gives a lot of resources and stuff as well.
Yeah, you've got a ton of. When I've seen some of your ads, and a lot of your ads out there kind of lead to a webinar, like an instructional webinar, like a sneak peek to how the process works.
Yeah.
And I think that's really beneficial. I mean, I tried to. By the way, I just want you to know, I tried to get on the webinar. It would not let me because you don't accept a UK number. I get it. I'm not,
Oh.
but it makes sense because you need US people that have EIN numbers. UK people don't really matter for this. But yeah, I couldn't get on. That was kind of. So maybe you're just gonna have to send me the video link, guys.
Hey, we're going to go live next week. I know that I'll give you that privately, but we're going to go live next week and you can watch that masterclass live. It's going to be on our YouTube channel live. So I'll tell you how to get there.
Okay. All right. Well, I'm watching. I'm going to be there for sure. And I think people like this is what I love. I love the fact that you guys are providing the education. So it's not just like, hey, come and speak to us, paywall, and we'll get you this. No, it's like, hey, come and we'll educate you. We'll show you how you can do it yourself, essentially, and we can just do it way faster than you can.
Yep.
Point blank. Period. We've done it before. Got the T-shirt. Can do it again. Pretty straightforward. But there were some other things that I remember reading about in some of the material you have online. When it comes to like the use cases for credit, because that's also another thing that people have to factor in. People are getting access to money that you take it to a machine. You probably charge you a fee for pulling out the cash, but you'll get some cash out of that.
Don't do that. Stop it right now. Don't ever do that.
People do
Never
it.
with a credit card. Don't ever get a cash advance. It's the worst thing on earth to do.
I know, but people do it all the time.
Don't do that. It's terrible. No, on the
I-
business side, there's actually a process that we teach you how to do that correctly with the right vendors in order for it not to count as a cash advance. So
oh,
you
seriously?
absolutely should never use a cash advance. The interest rate is always higher. If you have a 0% card, you're not getting 0% on a cash advance. They're going to charge you a fee to take out that cash advance. I think a lot of them are like 5% sometimes. It
Hmm.
depends on what card it is. No, there's actually third-party reputable vendors who will let you set up an account, and then they'll use their merchant account. And this is all approved by the credit card companies. This is all above board. And they will ACH wire transfer money off of your card to an endpoint. And it does not cost you. It's not a cash advance, doesn't show as a cash advance. You keep your 0%. There is a small fee, but it's like 2.9% for the one-time transaction. And it is the safest way to do it. Don't ever do a cash advance. And I believe that on the personal side. I understand sometimes you need it, but cash advance is always terrible unless you get your credit card company sends you one of those checks with the special offer that says, oh, this is 0% and it's not going to be this. Those you can kind of do. Business world, it doesn't typically work that way. So you want to make sure you use a correct vendor. So we
And that's
do actually
important.
educate and give that to our clients as well.
That's important, especially for people in the real estate world, where
Yes.
that's where had my experience. We used to be involved with commercial property. Sometimes you have people that you need to pay cash for, and you run to the local cash point, the closest one to you, pop that thing in, and just get hit with those fees. But because you need to pay somebody in cash because that's just the way some things roll sometimes.
Yep.
You're giving out some bonuses, like thank you for staying for the extra hour, whatever it is. Like you have to sometimes you want to incentivize correctly, and cash is a very good motivator. And as a business person, you want to be able to access that properly. And if you've got a solution for that, fantastic.
Yes.
Speaking about real estate, I noticed this is from literature from your website, because again, it's important. People think there's so many use cases for having this credit. It's not just free money. That you need to use this money, but there's interesting ways in which you can do it, because the credit cards aren't just the credit cards. We're talking about merchant accounts with specific stores, aren't we? As well, are we talking
As well?
about
Yeah, we do both. Yes.
yes.
Mm-hmm.
So it says so I can go to I call it Selco here in the UK, like a builder's warehouse, a contractor's warehouse.
Like Home Depot, Lowe's.
Home Depot, Lowe's.
Yeah.
And so you provide for that as well, so they can actually get access to much more in terms of raw material. They can do more there.
And that's in addition to the up to the 250. So we also have, as part of our membership, an educational component that shows you how to set up your business with Dun & Bradstreet, which is what is going to build your Paydex score, which is those vendor tier trade lines. Those are also going to be no interest because they are net accounts. So basically, depending on the agreement, you're going to get a net 30, a net 60, or a net 90-day account, meaning you can take that vendor card or that vendor account. Sometimes they don't even give you a card, and you can use it at the vendor to pay for whatever that vendor has. And there's a plethora of offers on there. You can get even marketing materials. You can get people that'll build your website based off of this vendor credit as well. So we actually help and assist you get up to 100,000 in that vendor side, as well as the 250 in the business credit. So you get both. And with the vendor side, it's non-PG. There's no social security. It's 100% EIN side. But the difference over there is your approvals are going to be much lower. They're going to be much smaller, but you use that stuff aggressively and it grows aggressively.
Okay. And PG's personal guarantee.
Personal guarantee. Yeah.
Okay. And this is applicable to inventory, like stock purchasing and stuff like that. So for all those Amazon FBAs out there, yeah, is that big? What would you say is the largest customer segment of yours right now?
Real estate is our largest avatar. I would say that the e-com world would be our second one. But real estate, in every kind of real estate, I have every kind of investor, flip, BRRR, RR, how many R's there are in that stupid thing. I never know how many R's to say. No, there's so many people who use it for different things. And even some of them can use it with that third party method to actually close on a house like cash. There is a way you can do that. Now, if you have $200,000 in business credit, sometimes depending on the market, that may not be enough, right? Sometimes it's not enough, or you've already done enough flips that you have like a commercial lender, right? But let's all talk about the reno budget that goes into any type of real estate you purchase, right? So we have a ton of people who use it for that reno budget so that they're not having to take out more than just the purchase price. And they're able to have flexibility without having any issue. Because how many times have we watched those shows where they're always over budget and then they have to like scramble to find more money? That's where a lot of people have developed with both the business and the corporate credit side to help facilitate that as well.
Okay. All right. So it's not, I can't really see any negatives here. I just love this thing. I mean, I just think like, and you've got 30,000 people to date that have
It's
now
probably
gone through the
35.
process.
It's probably more like
35,000 that
35,000.
have
Yeah.
come through.
Mhm.
All success stories. Any success stories in particular? Any notable, or just everybody is their own success story?
I think that everybody defines success differently. So I can absolutely tell you, I mean, you can go and as you know, you can go on any of those review sites and you can find us, right? And you can find an overwhelming amount and I would say a very overwhelming amount of positive. Can you find some negative? Of course you can. You can't please everybody all the time. And sometimes people get upset when we say, I'm sorry, we can't work with you. We can't help you right now. And they get upset and I understand that. But no, I think everyone's level of success is different. I can have a client who gets 50,000 and thinks that it's like the best thing on the planet. And then I have the next person who needs 200,000, so I think success is designed differently. But at the same time, like I said, the use case that I can say is my favorite is Nick Perry. He did an interview on our YouTube channel, so I can use his name. But he's our highest credit so far. Like he's the one who's come through multiple times. He is phenomenal. He credits Fund and Grow for being able to 10x his business. He's his own brand online now, and he's done an amazing thing. He's in the wholesale space. But I'm talking multi-millionaire, like really successful people. The one guy is the BRRR king, in my opinion. But he came to me because he actually doesn't use credit for anything. He was self-funded. Basically, he kind of hustled until he had enough and then never used any debt leveraging. And he came to me and he's like, I always tell people that cash is king and cash is king. And I did all these things. He goes, and then I realized I'm not right because cash is king, but I don't have any credit. And I that was when I coined the term with him. And I said, because credit is queen and you can't live life without both. And so he actually is one of my favorite ones because he came to me more because he didn't have any personal credit. He had like one credit card ever in his life and like a mortgage. And he's this multimillionaire guy, self-made, whatever. So he came to us and we built him a personal profile first and then a business profile. And it wasn't even because he needed the money for that purpose, but in order to get certain other things he needed good credit. And so people discount the use case of how good it is to have solid credit. And credit just isn't just a score on either side, on business or personal. The score is important, but the actual, mix of credit, the length of history, the payment history of how you operate in that account on both sides is huge. And so having all of that knowledge is key to being successful on both sides. So those are probably my two favorite ones I love to tell because I've got my highest client, but I've got tons of them that we get $100, $150, $200,000 and it changes their entire business, or it actually lets them quit that 9 to 5 and now go all in on that side hustle.
That's brilliant. I feel like I was like that guy. To be honest, I still kind of do that. I'll be honest with you. I do just work with cash. The money that comes in is what I count. The credit cards I have, I'll use them to make purchases here and there. Like if I know it's going to be a big purchase, like this Apple machine I just bought for like $7,000. I'm like, I thought, let me just max this thing out. Holy crap. But I bought it. So if I'm buying this, I'm buying that one on that card because I want the points. But I'll do that, but we'll have it pay off in full before the end of the month, or by the end of the month on auto pay. And so I'm one of those people. Like I don't really leverage it. But I should do more because there was a point when I needed access to credit and they were like, well, you haven't got any kind of track record. It's too clean. You got 2 credit cards. One we share with my wife, and it's like, it just wasn't enough for me to get what I wanted at the time. And I was like, okay, so maybe I need to start working. But I still make the same mistakes. I'm still not great with it. I'm still not great with it. I probably should be doing more. How much legwork is involved? Like, can people do everything online? Can it just be like interact with you guys, like make
Oh,
applications online, provide
the
information
clients.
online, and then with the banks again online, everything. Is it like that, or is it like, okay, you're going to send people on a little mission? Okay, now you've got to go to that bank in person, go meet so and so, show them
No.
this file. Like, how involved is this? Like, how much work is it for the person coming through the process?
So we do have one legal compliance call that has to happen so that we can make sure you're understanding everything and making sure of all the correct information, and we verify your identity, things like that. There's one call that does happen in that sense. Everything else is online. There's a portal, you're filling everything out, you're signing the bank disclosure online. And then there is a funding strategy call as well with your actual designated funding strategist. That call is to make sure we're going over the offers. Now, there is probably 2 or 3 banks, and they're only in certain states, that sometimes do require you to go to a branch. So we will talk to the client and see if they're willing to do it. If they're not, we're just going to throw that out. We're not going to go to that bank, and we're going to go somewhere else. There is definitely some phone work that has to be done, but we have ways to facilitate that for the client, whether it's having them get on the call, authorize, and then they get off, things like that. So we try to facilitate them so that it's as little as work as possible for that client. We have them sign everything. We assist with getting the application done. They don't have to worry about it. There's all these things. We're trying to make it as easy as possible so that the entrepreneur can be focusing on whatever it is that they're doing in their business. And we're just working over here to make sure they get the capital that they need. But we absolutely email, text, online portal access, like those are the main forms of communications. But we're also here by phone if they need us. Some clients like to talk to the person, and we obviously want to make sure we have all of those avenues available. But
Yeah.
we try to do all the heavy lifting as much as legally possible. We will do it.
Yeah, I guess there is like limits, right? Because you are having to dance between you're essentially a funding partner in a sense. Like you are a funding partner. Like you're not the bank itself. Like you're
No.
having to go between the regulations that are pre-existing with those entities, and like, okay, what can you say? What can't you say? I mean, that must be a big one for you guys as a business. It's like, because aren't there certain things surrounding credit like that you've got to be very careful with, like not ever misrepresenting the APR? Because I know that's a big one. Like if they were sold one thing, the bank actually has to honor it at some point down the road if they can attribute it all the way down. I know that's a big one with affiliate marketing. I just had a conversation recently with an affiliate marketer, but who specializes in the fintech and finance space. And one of the things she said was, she with her entire affiliate network, which is comprised of both influencers and thought leaders who promote,
Yeah.
and also just the display locations where you can kind of publish information. She has to make sure that everyone is saying what they're meant to say, and especially not saying what they're not meant to say.
Mm-hmm.
And it's like, because all of that, if a consumer makes a buying decision to get a credit card or something based on some wrong information, bank apparently legally has to honor it.
Yes.
Didn't know that.
Yeah, that's why the disclosures, that's why that call happens, because we actually are pulling that disclosure from that exact offer, and we actually require the clients to sign that offer as well. So we make sure we're going above and beyond and making sure they understand exactly what they're getting into, because there is a balance. There's a balance of responsibility and getting access to capital, right? You have to make sure that everything's going to align. So we are very aware of that, and we try to make sure that we go above and beyond for the client to get them set up for success. We don't ever want them to get into a situation that they didn't know what they were doing. And also they have access to that, to have that proof as well of what they had and what they signed.
That's brilliant. So you guys have got a really well thought out process there. And I love the fact that there's a portal, they can come in, there is that human interaction. They have a dedicated account manager,
Yes.
which is probably far more useful than the supposed account manager at the bank.
Yes.
The relationship with you guys, I'm sure, is far superior. And it's a one-time fee for the year.
Yes.
And you're getting access to all this money, multiple locations, multiple funding partners in terms of banks. It's very good. I wish I'd known about a business like this when I was first starting out. I wish there was. It would have made life way easier. When you see companies come through successfully, getting the money, and then creating a successful thing, I wouldn't be surprised if. I mean, I suppose I wouldn't be surprised if it continues as it goes, as it is right now, where people never really attribute their success to their funding partner. It's always to the guru. Like, are you guys? I feel like you guys have a bit of a mix of both, because you have. I know Ari Page. He has a book. I did
Yeah.
see that online. I didn't get to read it. I did see it. I did see the training material. There's a lot of information. There you go. There you go. Yeah, we see that. Um, there's a book. There's a ton of training material on YouTube. I was jumping around through there. You've got
Yeah.
a whole host of videos there talking about all different areas of, like, just general business success as well, isn't it? It's just business life cycle information.
Yep.
And then there's Ari's personal story, and I've seen a little bit of that too. Some interviews. It's like you're helping people access the money they need, but you're doing it almost in a way where there's this kind of thought leadership guru function aligned with it too. Do you see yourself providing more strategy for different things? Like, now we're going to look into marketing. Like, what's the future for Fund and Grow? Because you could take it a few different directions.
I think that Ari's
And you are
just
the ops manager. You're the COO. You know,
yeah.
like, you know if this is in the pipeline. So.
No, I think our pipeline always is just expanding the types of capital, the areas of things that we can do. How can we make this process even easier, seamless, whatever we need to do? I think he's the type of person who he wants to focus on what he knows and then building relationships with others that are experts in their area. So he likes to stay there. But we do have that component. That's why we opened up the premium coaching side to be able to offer some additional stuff, but I definitely don't paint myself as an expert of all things, right? So I love to leverage and bring other people into the mix of, like, okay, this person, I know enough to be dangerous, but this person is the one who knows, right? And so I think that's kind of how he loves it. I love to teach, so I do some thought leader stuff as well, but all of it stems back to the best thing you can do for your company is make sure you have capital set up and have a plan set up to be able to do it. So I think that's been our focus point. I think our future is just trying to, the first one is get to 2 billion in funding, because that's what excites us, to get as much funding for our clients, and then continuing to grow the knowledge. Because when I learned how little of business owners actually use business credit, I think I was just in shock. So I just learned that the other day, and I'm like, man, we got to find a way to make that like 40% and then grow it from there, and just educating them. So yeah, we spent a lot of time on YouTube giving out a lot of the, quote unquote secret sauce, because we want to educate people. Our value isn't just in the secret sauce. Our value is in the service that we're providing for them.
Yeah, I think it's one thing just being told where to go, but then there's execution too.
Yeah.
It's like, you can go and do it yourself, and take longer. It could be more difficult. You could make mistakes. You might not get as much as you wanted, and then you've locked yourself out because you can't reapply. That happens. It can happen.
Yeah.
A lot. You can snooker yourself, as we say. You're like, oh, man.
I like that one, actually. I might use that.
Yeah, you can snooker yourself, or you sit there looking at your partner and like, hey, I think we try this again through you, but this time we'll call Fund and Grow.
Listen, learn from others' mistakes, right? Learn from everybody else's mistakes. And we try to give a lot of case study stuff. So when we do our webinars, which you can find the old ones online, they're free on YouTube. We have our old webinar stuff on there. We try to have case studies of real people. I try to make sure that we're able to show all the different types of success, because, I can sit here and say whatever I want to say, but the proof has to happen. And I think that that's what has been the company's focus, is making sure that we're actually able to fulfill what we're saying. And they've been doing it since 2007. And it's been a journey, and Ari is very, excited to continue just to help and just help and help. And that's how he looks at it. And that's why we also try to be the most reasonably priced in the industry. Also, most people are charging way more than what Fund and Grow charges. And so our goal is not to just sit here and, nickel and dime everybody. We want to provide a quality service at a price that's actually reasonable for that brand new business. A brand new business can't spend 10 grand out the gate sometimes. So you have to make your price points reasonable for entrepreneurs that you're actually trying to help.
Absolutely. I think that's important. Otherwise, you can sit there scalping people for all the money they have available, and then they're not going to get anywhere. Even though, having said that, it's kind of like, hey, pay 10 grand, I'll 10x it for you. It's like, but there is, I guess, Yeah, well, they still have to pay it back, don't they? So it's not exactly.
Yeah.
But
Yeah.
I love the service. I love the fact that you're honest and you're genuine about how you want to help people. It's very apparent with the business and the way it comes across, just visually from the photos, just visually from the conversations that are available on YouTube. I've definitely become a fan because before this podcast, as you know, I'm involved in. We provide finance in a different way. We provide equity finance through investors. And it's a bit more of a longer drawn out thing. And we're usually talking about the 5 million plus range.
Right.
But even I'm looking at this, I'm like, I'm taking pointers in terms of how I need to consider rebranding the way I operate, because the way you're doing it it needs to be this accessible. It needs to be more accessible to the smaller business person who doesn't necessarily have the wherewithal or the knowledge, or has known the right person to connect you with whichever company that provides the solution. It's like, there needs to be this. And I think more and more people should take advantage of it. I can tell you, I've had of the 20 businesses that I've spoken to in the last month, not one of them they've talked about using their credit cards and maxing out my credit cards, but they're never referring to a business credit card. Not once.
Do you know maxing out your personal credit cards is probably the way that you kill your credit the quickest? That is the quickest way to kill your credit score in the US. Like, it is the absolute worst thing you can do. They actually will not lend you money if you are maxed out.
Yeah. But if you run it through an EIN,
different story, different rules, different things,
different entity, different legal entity. That's why it's an EIN for a whole different LLC, right?
Yeah. Divorce yourself. I heard someone say that once. I'm like, divorce yourself. Your business and you need to divorce each other, and you have to be a separate thing. You have to be two totally different things. And that's where it's at. And separating that is huge.
Yeah, it is. Because people try and blend it on the finance side, but as soon as there's a legal problem, they want to make sure it's separate, right? So, exactly. All right, Amanda, thank you so much for your time. I really appreciate you taking the time to come on here and answer my questions. I hope that whoever's listening here, in my audience, my audience is typically early stage owner founders. A lot of those guys and ladies and gents are going to be interested in knowing about this. I know you have an affiliate program too. I do have affiliates that listen to me, so I should say this right now on the show. You guys have an affiliate platform, a program even that people can get involved with, and they can email you guys directly about that, where they can benefit, because this is one of those kind of easy deals. Just so you know, if it isn't as obvious as it should be, this is like the easiest sale on the world. I'll give you $5. Well, give me $5 and I'll give you $10 back. This is like the best. This is how you can't get better than that. All right. Thank you so much for being on the show. Till next time.
Thank you.